Next, we've seen a huge move up at the beginning of October, 76.85 high, and we've pulled back to this area. The low in this area is 65.74, $11 per barrel pullback, but it's still within its trend line and moving average support. The purple line is a 200-day moving average. Yellow is 50, blue is 100, and so it's below those, but it's above the 200. It's bounced. There's some different trend lines, average trend lines in this area, so it's near support. So even if the trend is down, I believe we're due for a little bit of a bounce. So nothing goes straight up or straight down. You have about $9 pullbacks in this area. The pullbacks get larger as this price goes higher. So you see this pullback here is 63 high. The low is 56.04. So about $7, and then in this area you have a high of 70.91 to this low point of 61.62. So $8, almost 9. And then in this area you have 73.49 to 63.57. So about $10, and then here we have about $11 pullback. So it's 7, 8, 10, 11, and so you can't use the next pullback as your stop loss necessarily. Although I think if this goes higher, I think this area will hold. So I think it's a good place to consider long trades, and QS and gap fill and reverse are the strategies to do that. Anticipate this from now or starting at the beginning of November to take long trades in crude oil based on this. I want to show you the latest on those. Here is the latest performance summary on QS. It's been sideways as crude oil has sold off. So equity peak in August and October 1 came here, and it's been down this month. And so you see a losing month of 11.30, and not bad. This is a long only strategy, and when crude oil goes down $11 a barrel from the beginning of the month, pretty much straight down, and it's only down 11.30, not bad. So I like this strategy. Holds up, and looking for this type of equity curve potentially if this market actually does move higher. So we like this strategy, taking long trades only on QS, and so that's one approach to trading crude oil going into the end of the year. Another approach is our gap fill and reverse. Taking a look at the gap fill and reverse in NinjaTrader 8, we looked at QS and TradeStation. Both these strategies work in TradeStation, NinjaTrader, and multi-charts. Here is the latest performance report on gap fill and reverse from our book, Algorithmic Trading Systems. And you see the long side works much better, so I recommend taking the long trades on this. $79 average trade profit. The short side is not as good, but we can really improve this with the money management algorithms as well. If we look at the average trade profit over the last 10 trades and make sure it's above 0, then the results dramatically improve. And I'm going to show you that with the money management algorithms in NinjaTrader 8 and how you see the average trade profit increase when you monitor the average trade profit. So you improve the total net profit from 60,000 to 69,000, and you take the trades from 1137 to 659, and the average trade profit for both long and shorts is 105. That's that number we like to get to, greater than 100. On crude oil and the long trades, 140. The short trades improve, but we really like the long side. The drawdown is 2,900 on the long side and much bigger on the short side. So crude oil, even this is going back to 2006, so over the long term, crude oil tends to do well, even in a downtrend, taking long trades. And so while I believe this market can bounce, this strategy shows profitability even in the long term, taking long trades even when crude oil is trending down. So gap fill and reverse crude oil, QS long only crude oil are ways to trade crude oil going into November.